What is the mood point like, Ajay? I mean, we are almost at a new all-time high on the Nifty. Bank Nifty hit a new all-time high, but does not feel that we are at an all-time high. I mean, you ask anybody, they would say, yeah, we've not lost money, but we've not made money. The whole feeling of celebration which you normally see, the surround sound, is missing this time.
Good morning, Nikunj. Because very simply, if you look at over the longer periods, 1 year, 2 years, the returns have been pathetic. So yes, the volatility has been the name of the game in the market. But if you just look at 1 year return on Nifty, it's barely 1% at this point of time, from point to point. So euphoria will come when people make lots of money. In this market, I don't think people have made a lot of money because they're stuck to the old concept saying, let's hold the stocks, let's hold the index, let's see where a mutual fund goes. And what has happened ultimately is extremely poor returns. In the highest interest rate scenario, your equity returns are 1% at this point of time. So, the exuberance comes when you make good money over the period. In this particularly last 1 to 2 years time frame, or maybe even 3 years, except for a couple of mid-cap funds, by and large, people have not been able to make good amount of money. And that's what is bothering people that yeah, market could be in high, but where is my return? And you look at 1 year and say, my God, I never made any money. So I think it's a time period which is now telling on people that, and it's a good thing. And I'm saying it's a good thing because people have now focusing and saying, sure, I could have made 10% return on my stock or 20%, but have I made it over 3 years? Which means my returns are less than debt. The irony is Indian equity markets have given less than debt returns now for a number of years. No matter how much noise you make, the fact is your PF has given you post-tax better return than most equity markets of India.
But it's a very easy solution. Watch Ajay Srivastava, watch ET now, you will get ideas to make better returns. It's very simple.
You
I'm
know,
giving them an easy solution.
well, I tell you but our solutions are very, very, I would say, unexciting. Like I keep saying that my last 2 years back or 1.5 years back, the largest investment we put in one things like IndiGrid. I'm not saying buy it, but I'm just sharing with you. Power Grid Infra, when it came out on the IPO, 100 rupees, we put lots of money there. Now, those are very unexciting stories. But at the end of 1.5, 2 years, you find that they have good return. So, we Whitehead tells us balance our returns. And as I keep saying, you want excitement, go skydiving. You want excitement, go snorkeling. This is not a place to find excitement. This is a place to get security for your family. This is a place to enjoy the returns. You want excitement, hundreds of things, go climb the Everest, as the market has just done.
But Ajay, one can't deny that at least over the last 1 month, if we want excitement, PSU banks have been the space to go. Just look at some of these stocks and how they've flown high. I know you have advocated that you don't advise investors to buy into PSU stocks, only be in these stocks for the dividend yield, correct? But are you having a change of heart, having seen the way these stocks have performed?
Not at all. The beauty of old life is you have enough experiences to tell people history will repeat itself. These stocks have done magical wonders in short periods on number of occasions. It's not the first time. Number of occasions done magical, and then the reality hits that it's a PSU enterprise at the end of the day with that kind of talent. I don't bank with them. Maybe some people do bank with them, perhaps, and that's why they get the deposit franchise. But that franchise is dwindling at the end of the day. They don't get the best of the credits. They don't get the best of the retail credit period. They don't. So, so purely on franchise, would you buy a PSU stock? That's what I said in the whole universe of PSU, apart from commodities and defense. Look at what's happened to your OMC stocks, decimated completely. Just wait. Yes, sure, it's excitement. Sure, the returns are almost what on a year, 30% return, if I'm not wrong, on the PSU index. But these stocks are meant to buy and sell. That's what I said. The story is they're not long-term stocks. There's no long-term future of PSU Bank unless somebody sells this, which is looking very unlikely at this point of time. You can excite yourself with the story, but the story will end in misery in the end. If you hold long enough, you will lose money. I can promise you this much.
Story end in misery as well when it comes to new age tech companies, or are you sticking your neck out here?
No, luckily I kept my neck on my shoulders and said that has been the new age tech stock. Most have good quality business models in the sense that they serve a very useful purpose. But at what cost? I was reading Zepto today in the morning. Please don't take offense. Zepto is the name. I just read it. Turnover 120 crore, losses 295 crore. You got to be genius, buddy, to make turnover of 120 and loss 300 crores and people giving you another 500 crores to burn it. It's been the greatest fool theory where the employees have been the biggest beneficiaries. The PE fund driven by zero interest rate money have been the biggest beneficiary. If unfortunately you are buying these stories now at this price, you already paid a high price And it's not over. I'm telling you, it's not over. It's going to go down and go down significantly more. So if you're catching a falling knife, well, good luck to you. And number two is your threshold return is higher than, let's take an Aberdeen which bought Nykaa shares. Aberdeen's rate of return, if you look at his historical price, pathetic at that point of time. And they're happy with 5, 6, 7, 8%. Are you happy with 8% return? Answer is no. Therefore, don't follow the crowd and say institutions are buying, so I'll also buy it now. Your threshold is very different, much higher. You can get 8, 9, 9% return or 10% return guaranteed by the government. Why would you want to risk using? So new age tech concept is good. Valuations are still crazy. And you've seen the rush is on. The smart people are selling them off and offloading to the suckers at the end of the day. It's going to end, and it's going to end pretty badly for a lot of investors, including institutional investors who even are buying at this price. Don't catch a falling knife. Let the return, if it goes up, but it's a big falling knife, and it's still a long way to go.
Okay, so you're finding the a new age space like a falling knife. You're wishing them good luck. You're clearly staying away from it. And I also understand that you're also staying away, Ajay, from cement as well as specialty chemicals. An absolute no-go for you?
It's not no-go. I think specialty chemical, we never put no-go because they give good pockets of returns. The problem is the valuation. If you look at even today, the specialty chemicals, they are running at a valuation of 40 plus PE with almost zero growth rate. Now, if you're an investor of any kind, why would you buy a stock which is not growing at a 40 PE at this point of time? In terms of their positioning in the global market, fantastic. In terms of the business model, extremely good. Competent management, absolutely relevant product to the world. But am I buying at the right price? And that's the question which keeps bothering us. And that's why it's a no-go right now. I'm not buying stocks of a chemical company, no matter how great the chemical is, at a P of 40 when the growth rate is zero. And that's a conundrum. I will go back. I will buy again when the P's become more reasonable. They have a very good business model, long-term business model. It's not a short-term business model. But if you bid up the price in this fashion, how do you make a return on your money? I think that's the bother. So it's not no-go, but it's a valuation issue more than the company issue at this point of time.
So can you share with us which are these stocks that you have identified, which you are waiting maybe to correct with the valuations to become more reasonable, become a good entry point? Since your research seems to be in place.
No, see, everybody knows the name. It's not that we don't know the name, whether it's the Amin's business, whether it is the composite people like SRF who are in the business, whether it is Deepak Fertilizers, whether it is, Aarti Industries. I think names are all known. I'm not putting the names to recommend them. So there are about 10 names in India, very strong global players in chemical industry. They're not small players, they're big, large players. Deepak Nitrite, for instance, in Phenol, Phenetics, it's a very large player. So I think they're all global players. I think the key is either they get onto the growth trajectory, which they can't because globally the industry is not growing or the economy is not growing, or the valuations come down. One of the two has to happen. If both continue in the same pattern, then how do you make returns from the stocks at the end of the day? And that's it. So we have good companies. Leave no doubt. They're very good companies. But the scarcity value of the stock in India builds up valuation so fast. Very difficult to make money this point of time. I'm very happy to book profit, sit back and enjoy it and see when it happens. Doesn't happen. If somebody makes money, good luck. I don't fret. Someone should make money in the market. That's more important.
I want to go back to the consumer tech, fintech, new tech, or the internet companies, whatever you want to call them. I feel that the price discovery did not happen last time because there were no sellers. Everybody wanted to buy, P guys wanted to buy, anchor investors wanted to buy. Now the real price discovery is happening. There is supply and demand. It could be 10% lower, it could be 15% lower. Ultimately, market will price some of these stocks in a equilibrium kind of a scenario of supply and demand. Is that the way of looking at it? Now, whether it is 10% lower or 15% lower, that time will tell us. But do you think in the next couple of months, maybe weeks or a quarter or so, the real price discovery will happen?
You're right. Price discovery will happen. And I think there'll be two sets of companies. One is companies which need capital infusion to run. So they're making cash losses. So they need money. Now, there is a runway issue that would they be able to refinance within that runway? I think those are one set of companies which are extremely high risk companies. because they need to raise capital to make the bill. Like we just spoke about the example, the guy's turnover is 120 crores and he's losing 300 crores. Genius, absolutely. So he needs money to spend more money at that point in time. Now, those companies, price discovery is not a function of demand supply, in my view, is a function of whether they can find a new sucker to fund them. That's the bottom line. I'm sorry to use the word sucker, but that's what they are. So I think those companies still will try to, the PE funds invested there. Now, they will try to maintain this thing. Please understand, there is a global finance industry invested in these companies which cannot let it go. So whether between them, investment banks, institution, pension fund, how they park, the key is how they park their equity into the pension fund, which is what is happening today. Now they have large global network. So please don't, you may say it's price discovery. I think it's garbage being pushed into the world pension banks at this point of time on a very convenient mode because there is no other case of buying these stocks. So so-called price discovery, I think, is led by institutions, investment bank putting it in other institutions till somebody takes a bigger hit than what these guys are. So I'm not sure it's happened today, price discovery. Price discovery will come when the retail public starts buying, when we have a mutual fund start putting in money, when global mutual funds put in, when they become part of ETFs and they get into ETF mode and they get indexes into index mode. That's when price discovery will happen. Today, it's conveniently placing, and there is a rush, gold rush out there, get out and push their stocks into world pension funds. And there are enough of them out there to be pushed into. So, you may be right, price discovery, but I think it's still far away from it. Today, it's a very convenient methodology to push from one set of investors, which is the PE fund, global PE fund, into the next set of suckers called the pension funds.
Okay, care to share any more details in terms of where you've seen opportunity? The last time you said agri-related, real estate, cotton yarn companies, anything else?
See, we had put money, as I told you, as a side play. Nothing, you can't put large money, tea industry. We are still continue to be bullish on that. Not only because tea, it's real estate. Northeast real estate, very valuable. Eventually, all Northeast tea gardens will become a real estate place. So we put a lot of money there. Commodities, we continue to hold, and we built a position when the market got corrected, because if India or world, whatever has to grow, these companies can't be substituted. It's not like I can have a TVS coming in and taking the largest market share of a two-wheeler industry. Suddenly it outsmarted the big boys, the heroes of the world, etc. That can't happen in commodities. There are 5-10 global companies. In India, there are 2-3. They can't be replaced at the end of the day. We're still holding on to the firm. Banking, we put in a little bit, but not too much at this point of time, because we firmly believe as a group that till RBI does not allow positive interest rate in this economy, our growth and people's ability to spend will remain limited. The model of last 10 years of RBI to subsidize corporates has not worked. Our consumptions are struggling. The path is not tax cut, as what has been propagated in the last 24 hours by Industry Forum. The prospect is get the interest rate up to real terms. So a person who retired, a person old age, people who are saving, make genuine money, and then they will spend money. So if that happens, well, yes, our consumption stories look good. We have invested in consumption stories. We have invested right now in some brand stories at this point of time, because the people are buying out the brand. And the last, the least, lovely restructuring stories coming out. You saw what happened in UPL. Restructuring story got announced and the price bumped up, and it's still a long way to go. You saw what happened to GHCL. You saw what happened to Advent when they bought Eureka Forbes. So I think you need to keep an eye out to see where are the restructuring stories happening in this economy, and they will give fantastic returns, I'm telling you. So, and the reason being, the whole restructuring means take out value for it. And the last, the least, of course, is few of them, like an Easy Trip, which I hold, I think has done wonderful job even on the, they get tarnished by the name of e-tech, but I think they're doing a good job, never had a cash burn, made genuine profits. So there are pockets of such companies who have a good business model, make genuine profits. So I think if you look at this sector, and less hotels, they have done a wonderful job for the investors. They could have done a still better job if greed did not get the over them. Today, in the greed to increase rates, they've increased rates to the point where occupancies have fallen, and therefore the returns to shareholders are now looking mediocre compared to what they should have been. They don't need to follow multiplex industry in what they did today. But I still believe long runway for hotels in a country like India.
All right, Ajay, you've really given us a lot of things to really mull over. Really appreciate your time and glad you could join us.
Thank you very much. You have a good day.
Salish,